welcome to Profiletraders. This is Reza and you're listening to my market analysis for July the 5th. So we need to go look at our daily chart to get a bigger picture of what is taking place. And what we are seeing here is that after the Brexit decision, market took a serious beating on the way down. We dropped from around roughly 2120 to 1985, and as this was starting to look very scary and very ugly, immediately the Federal Reserve and other central banks started to pour in an unprecedented amount of money, as you can see it on the bottom chart, in order to completely, totally reverse the market back up. Now, this was also fueled by the fact that the recovery was so aggressive and violent to the upside that anyone that was holding short positions obviously was absolutely forced to cover. Also, after the Brexit, any chance or any possibility of a rate hike that the Fed was talking about for possibly the next meeting or even towards the end of the year, it's all now out of the picture. So when you have an environment where there is no rate hike, but in addition to that you have very, very low interest rates and massive capital injection into the market, it's a no-brainer that you get the kind of push to the upside that we just witnessed. So now can we say because of today's little drop that this whole move is in danger? Absolutely not. In the big picture, this move will not be in danger until we do break the bottom of the trend line that is holding this push to the upside, and you can see clearly that the trend line goes from this low here to this low, and until this is not violated, we are going to fluctuate within this channel. Now, if it breaks the top of this channel, the 2120 level, it's again going to be into brand new high territories, and if they want to push it, then the real true level of resistance will be the other side of the channel, roughly around 2200. If reached, I believe will represent a tremendous level of resistance up there. But for the time being, let's go look at our profile chart and see what is happening. Fact that on the way down today we started to go rotational, all was indication that there was absolutely no rush or panic selling coming into the market, and the fact that it started to go rotational down here was sign that support was building. And then of course during the last two periods, if we separate the chart, you can very much so see it. During M and N period, that's where the big push to the upside came. Whenever you have late days push like that during the last half hour to 45 minutes, of course you cannot judge if it's a real push or if it was forced covering towards the close. That is to be seen with the action during the overnight. But if we do manage to clear above today's high and break above 2087, there are a couple of targets up there. One is going to be 2091.75 or 2092 right here, and then if we pierce through that and we do not see resistance coming in, I strongly believe that we are going then to go close today's gap at 2100. And of course if we do break 2105, then we're gonna go challenge the very most recent high that we got prior to the Brexit, and then this whole deal will be forgotten and no one will care anymore about it. Anytime that we do break today's low, I have two levels of support, one at 2065, and then there is another zone between 56.5 to 2059.25. So one has to assume that due to the fact that the low did hold and we closed very close to the high of the day, that this 2072 is going to be short-term bottom, and once we break through 2087, we should then go towards 2091 and then eventually 2100. Now for crude, it didn't act as strong because we still managed to close below 47 and below the day's middle range. But we have to keep in mind that this last leg of a drop had $2.90 straight in it. You calculate where we were at this 49.35-ish, all the way down to the low here, 46.30 something, 46.34. That was a $2.90 drop. So when you drop by that much and you are near past support, it is very normal that you get some sort of short covering and profit taking on the downside that will make the market bounce. Right now the main level of resistance is 47. We need to clear 47. If we do that, then most likely we're gonna go attack these areas of underdevelopment on the profile, and the next target to the upside will be 47.74 and then 48.08. And on the way down, I would clear this 46.14 because it's too close to 46, and call 46 as the main level of support, which if broken, crude could be in a very big trouble, because past that 46 there is really nothing before 44, and you can see that better on a daily chart, where we did hold support here at the touch of the main uptrend line, and as you can see, if we do break below this 46, there is really not much prior to 44. So this chart does look a bit weaker than ES, and again 46 is very important, because if we do break it, we will be breaking out of this major trend line up, and the next target to the downside will be 44. This is it for today. It was relatively a quiet session. Summer has started. I guess it's gonna be calm, low volume, and also a lot of attention will be towards what comes out of news, because almost every given day we have something going on around this world. So thank you for listening. This was Reza with Profiletraders. If you like to learn market profile, check my website. You can get all my 5 courses, 1 year to my trading room for a discounted price of $575, and you can also have 2 days trial to check the room if you wish so. To the next time, and trade safely.